Alright, welcome everyone to this new video. Today I will be explaining compound interest to you. So, imagine if there was a technique that required little to no effort and it will make you a fortune. Wouldn't that be nice? Well, lucky you because it exists and it is called compound interest. And the great thing about it is that it costs very little effort. Alright, let's take a look. What is compound interest? Compound interest is the interest you earn on your initial investment plus the interest you earn on the previously gained interest. So we're going to take a look at an example here. Let's say we start off with $1,000 and let's say we start off at the age of 50. It's pretty late, but we're going to take a look at it anyway and everything will make more sense later on. So we start at the age of 50 and we start with $1,000. We invest this $1,000 into the S&P 500, which has an average annual return of 10%. So let's take a look what happens. So let's say every year we gain 10% on our portfolio worth. So we start off with 1,000 as described here. Now, after the first year, when we turn 51, thanks to the 10% gains, we will have 1,100. So we gain $100. But now the great thing about this is that for the next year, we will gain 10% on the 1,100 instead of the 1,000. So the next year, we will turn those 1,100 into 1,210, and we will gain $110 in that year. And this basically keeps on going, and it is a snowballing effect. So we keep on gaining more every year and year. And as you can see on the graph here, it becomes parabolic. So in the beginning, the gains are quite minimal, but they keep on growing as we go further along. And at the age of 70, you will gain $611.6 in that year. So let's take a look at what those $1,000 turn into at the age of 70. So those $1,000 became $6,727.5 in 20 years' time. Now, you might be thinking $5,727.5 gain is not that much for a 20-year span. And that is true. If you have a regular job, you will make way more than that. But the first thing to keep in mind is that you didn't have to do anything for this except setting up an investment account and putting in this first $1,000. But the great thing about compound interest is the following. So let's take a look at a case where you would start in your 20s. So let's take a look at this. You start at the age of 20 and we're still going to the age of 70. So as you can see here, this keeps on increasing and I only added the first 10 and the last 10. But as you can see in the end, at the age of 70, we would end up with $117,400. And that is quite significant because we only invested 1,000 and we gained more than 100,000 on that $1,000 investment. So those gains are pretty significant, although they are in the span of 50 years, but you didn't have to do anything for it. And if you take a look at the graph, we can really see the parabolic growth character of this growth. So let's see. We turned $1,000 into 117,390.85. That is an 11,640% increase on your investment. That is quite significant. So, but if you think this is crazy already, let's see. Let's look at the next example. So we start off with 1,000 again at the age of 20. but now we contribute $100 every month to our investment. And this investment would, in the end, turn out to be $1.588 million dollars. And because of the $100 we invest every year, it turns out that in the end, after 50 years, we would have invested $61,000. But that $61,000 turned into over 1.5 million. And according to this, you would be a millionaire at the age of 66. But if that isn't enough for you and you want to become a millionaire earlier on in your life, you can also invest $500 per month. And then you would have invested $301,000 in the end. And that would have turned into $7.17 million. Now, this will have made you a millionaire at the age of 50. And that's pretty crazy to think about because you invested $300,000 and that's basically all you did. And that would have turned into more than $7 million. And this $7 million is way more than you need to live comfortably for the rest of your life. You can retire at the age of 50 and put it into, let's say, dividend stocks and live off of dividends, or put it into real estate or whatever. And for the rest, you do whatever you want. All right, thanks for watching, guys. I hope I was able to explain to you guys the principle of compound interest and show you that starting at a young age is really, really, really beneficial. But bear in mind that it is never too late to start. There's always money to be made in the stock market. All right, everyone, thanks for watching, and I'll see you in the next one.